Great. We'll get started. Thanks again, everyone, for joining us today. I'm really excited to be a part of today's webinar on behalf of Synctera. Synctera is excited to host Scale Up Sessions, which is a webinar series that we're kicking off with today's webinar. And the Scale Up Session series is to provide companies offering banking products with tips and best practices to drive growth and revenue throughout the entire user journey. So again, today is the first, so please keep your eyes out for more of these webinar sessions coming soon. Synctera, for those of you new to our community today, is a banking platform that provides clients with everything they need to build fintech and embedded finance products and effectively manage ongoing operations. We work with banks, startups launching for the first time, and large companies adding financial products to their existing product suite. Before I jump into introductions, we wanted to let everyone know that if we do have time, we'll do Q&A at the end. So please feel free to add questions into the chat as we go, and hopefully we have time at the end to answer some of them. So to start, I'm Lisa Durnford. I'm the product manager for Synctera's risk and compliance platform, and I also happen to wear the hat of Chief Compliance Officer for our Canadian business. I've been in product compliance for a number of years now. Previously helped to build Wealthsimple's crypto compliance program as the first regulated crypto trading platform in Canada. Very excited to co-host this today with Alex Meredith. Alex, over to you.
Hi guys, thanks everybody for joining, and thank you Lisa for the intro, or at least introducing me. I've been working with early stage startups for about 15 years now, working primarily on growth and product growth specifically, a lot of product-led growth initiatives. I work with a lot of startups today, work with a handful of accelerators on doing just that, coach and mentor, and used to work with Clover as director of product over there, and now excited to jump into this.
Awesome. Thanks for being here with us, Alex.
Yeah.
So to set up today's topic, outside of, I guess, more passive interactions that a company might have with their users, like marketing and branding that kind of invites the user to potentially sign up for the product, onboarding is the first direct, engaged interaction a company has with its users. And onboarding is about getting users to activate and providing users with as much value as quickly as possible. While in some industries, you can really get friction in an onboarding process to be close to zero. A user presses sign up and can immediately leverage the breadth of the product. But in fintech and other strictly regulated industries, there's always going to be some friction as users navigate requirements like KYC and disclosures pretty much right up front in their onboarding flow. So how can we leverage this friction to drive success, not only during onboarding, but for the rest of the customer experience as they add new products down the line with your fintech? How can approaching compliance requirements during onboarding with a thoughtful strategy actually help a fintech increase the chance that a customer will successfully move through the onboarding process and become a happy customer? How quickly can a fintech build value into an onboarding process and communicate this product value to users within an otherwise compliancy and potentially burdensome process? So with that, and before we really dive into all of those questions, I'm excited to talk about this today with Alex as a growth expert. So I'll hand it over to him to dive into how we think about growth during onboarding.
Awesome. Thanks, Lisa. So let's cover the kind of larger topic of growth before we dive right into activation, because that's going to be really, we get into the nitty gritty of all of it. Most companies that, when we think about kind of the larger picture of growth, are really successful in 5 areas. And we have those 5 areas here: acquisition, activation, revenue, retention, referral. If anybody's familiar with pirate metrics, some of these might look a little familiar. That's kind of what these are. But ideally, you get all these kind of churning in a way that we creates a flywheel that creates growth, compounding growth. The first stage of growth that we look at, and our very top of the funnel, is acquisition. Acquisition, typically, when we think about it, it's just to the point of sign up, pretty straightforward. But it's that very top of funnel that leads us right into activation. Our activation phase is really we're going to spend more time talking about today. Activation really, when we think about it, covers the onboarding phase, but more importantly, it covers the activation of your user kind of getting into, I'm sure many people have kind of heard the term aha moment or your North Star metric, which should generally kind of coincide with whatever your aha moment is for your users. Activation phase kind of brings us into the revenue stage. Revenue, if you think about your pricing model, your monetization strategies, any add-ons, upsell opportunities you might have, and what that looks like for your business or for your product. That kind of leads us into retention. Retention, you can ask, retention generally is, I think we can all agree, is by far the most important piece of the growth funnel. You don't have good retention, you don't have good growth. I think many people have heard about the leaky bucket syndrome. We can acquire as many users as we want, but if we're not keeping users to stick around, then it's pretty hard to grow a business. As a standalone, retention is probably the most important piece to growth. But one of the most impactful pieces to retention is activation. Good retention happens when you have good activation. A lot of times when I talk to founders about this, kind of use the example of like a restaurant. You go in, if you have a really good welcoming experience into a restaurant, if you go into a nice restaurant, gives you a friendly welcome. Maybe they take you to the back of the kitchen, you get to see everything. You're pretty impressed off the bat. It's a good experience, and that's kind of what you want your activation to be. That kind of leads you into the retention piece. If we stay with that restaurant example, retention's the food, right? So you have to have good food for your users to keep sticking around. You can have a really nice welcoming in through the kitchen and have a great tour, but if the food's not good, people aren't going to be talking about it. So that's kind of what we want to think about that activation as being super important, as influencing our retention. And then finally, the referral piece, word of mouth or whatever, anything when we talk about just having our users to be able to recommend our product to someone else. But going back to the activation piece, that's what's really important. If we can get users to come in and have a really smooth activation, and again, that's not just sign up. That's not just getting somebody to come on board and sign up and say, great, we got a registration. It's really activating that user to the point that they've received value, they've reached that aha moment, and that often influences how our users will stick around and their experience long term. So again, really good activation means really good retention, generally speaking, or at least it certainly influences good retention. There's a study that I refer to every once in a while by AppQs that they actually, if anyone's familiar with with the company AppQs, more mobile focused, they've got a tool on their website I'm sure we can send out after the webinar, where you can kind of play around with some metrics. You can, they got a calculator where you can play around and you can kind of see like, all right, if we were to influence our activation phase, how does it impact the rest of kind of the rest of this funnel? And typically, or generally speaking, that activation phase by improving our activation phase by, let's say, 25%, it generally leads to an increase of 37% or so on to our value as a whole, or to our revenue numbers, specifically to MRR. So anyway, point being, the more we can influence activation, the more we can influence our retention, and help this entire flywheel get going smoother. Kind of zooming in on that activation piece a little bit more. So like we can break that down into kind of 4 areas. So I mentioned that activation is a lot more than just the registration, the sign up that we often think about when people talk about activation, when they talk about onboarding. So we broke this down to kind of 4 areas. Top stage of activation is kind of that acquired stage. So if we think about that loop, those users coming in from those acquisition channels, they get to that initial sign up. Great, we've acquired them. We have something, we have their attention. We've got something, there's something to them. And so we bring them in and we bring them into like the onboarding stage. Onboarding, when we think about onboarding, I think this is one of the things that when I talk to companies, when I talk to founders, one of the biggest mistakes that I see companies make is that when they think about onboarding, they think about it as just through registration. So, okay, great. We got our user to sign up, or we've acquired our user. They're on the site. They've gone through. Maybe they've given us a credit card number. Maybe they haven't, but we've got them. We've got their contact information. But what we really want to do, and one of the most helpful things you can do when you think about activation, is to think about the time to value. So not just onboarding that user and bring them on through registration, but onboarding as a whole is all the way through to the point that that user has received whatever it is you're offering. So if you can calculate what that kind of time is, that's a really good metric for companies to look at and optimize. If we can say, all right, great, at one point we got our users to get whatever that core value is that we're offering, we got that to them in 24 hours and 48 hours, whatever it is. If we can start to optimize that and bring it closer and closer, that's a great way to start to optimize your onboarding flow. A very high level metric that you can optimize and can work around. The next stage after onboarding is that activation phase. Now, with activation, this is often non-linear. And when we think about like activation, again, it's not just a matter of like, okay, great, we've got them on board, they've gone through registration, maybe we've gotten a credit card number, but there are going to be a number of factors in here that gets a user to a point that they're fully activated. So example I often give when we talk about activation is like for project management tools. An activated user often if we think about an activated user for a project management tool, let's say a user signs up, a user creates a project, maybe they create a couple tasks associated with that project, and then they invite additional users, their teammates or team members onto that platform. That could constitute an activated user. You have a series of checks, kind of a checklist there, and they've accomplished all that. Conversely, you could have a user that invites their team members first and then creates a project and adds tasks, whatever. So they've invited users first and then they've created the project. That could also be an activated user. Neither is wrong. They just have different flows. So the point being, on that activation phase, oftentimes when we think about how we're defining what an active user is, it's important to just kind of to create that checklist and identify what it means to be an active user, so you can kind of better anticipate that journey and build that out and help define that. And then finally, the last stage on the conversion piece is really how do we get our user to the point of where they've received value and now they've become a paying user. For a lot of like B2B SaaS companies, the major step here is moving someone from free trial over to paid. But it could vary from company to company. But generally speaking, that's the point that we've got a user, they've received value, and now they're an active, engaged, fully engaged user. Obviously, there's a lot of steps in between all that, but that's kind of at a very high level. The important thing kind of getting into this too, and Lisa, I'd love to hear your thoughts and kind of dig more into the compliance piece, but that the compliance piece, especially for fintech companies, is so important as we get through onboarding and we talk about that time to value. It'd be a really hard piece to kind of get through and incorporate, but that's generally where we see it fall into, is kind of like in the onboarding phase.
Yeah, no, exactly. And I really appreciate the importance you highlighted about defining what an active user is to your company and in the context of your specific onboarding funnel at your fintech. And I think that is really important and can also help with elements of the compliance requirements that you're going to have to layer in throughout this funnel. So yeah, I mean, building from everything that Alex just described and sort of working through this activation funnel, I want to dig into some of the complementary compliance steps and obligations that are likely going to need to be done at each of these stages. And I want to talk about how the design of these compliance requirements can actually help get your users to the next activation stage. Quite often, I think we look at compliance requirements and focus on making them as light and compact and efficient as possible and sort of minimizing them, which I think is a worthwhile exercise and appreciate that lens. But I want to flip the framing slightly and look at how designing compliance requirements really thoughtfully and with a strategy behind it can actually increase the success of your onboarding funnel in more ways than just getting users through the steps. Which is definitely at the core of your metrics and sort of what you're looking at quantitatively. But I think there's a lot more layers into this that can really drive value across and throughout this process. So I'll dive into some specific examples running through, down this funnel, just like Alex did. So at initial sign up to start during the acquired stage, this is where you get to set the context. And I like your example, Alex, from the restaurant as like a really clean example of how this experience can kind of go poorly or go really well. And that really sets the tone kind of for the rest of that experience. First impressions, very critical, especially if for fintechs, one of your first questions to a prospect user is, what's your social security number and where do you live? So we're kind of immediately getting into some really personal questions. So this is where you as a company get to set the tone for how you are going to guide and support your users through their experience, not just during onboarding, but throughout their entire experience with your products. So how well do you understand them? How much thought have you put into your products? And you can demonstrate, current and then potential value down the line of how well you value good customer communication and empathetic customer communication. So specifically, you can be upfront with users of what to expect, how long is this going to take, why are you asking for such personal information, and how are you going to use it? And if you're adding, design elements like adding tooltips throughout the experience, be clear here at the very beginning of how they can use that to their benefit and how to find those tooltips. And so continuing down the funnel now to onboarding, or the time to value section that Alex was describing. This is where you can really demonstrate empathy with your users and really build kind of a trusted relationship right from the start. So things like anticipating potential misalignment between where your customers or your potential customers and where their context is and where they're coming from, and what you're looking for. And anticipating those potential gaps and kind of being proactive about how you might manage them or mitigate them. So for example, if you're offering a business account or a business product to sole proprietors, for example, if they're signing up with you in the context of a business account, they might have their business in mind. They might be thinking about their business information as they're onboarding with you. But if the phase of the funnel that they're in is to onboard as an individual and to go through KYC and identity verification as an individual, be really clear about which address you're asking for example. They might be thinking, well, it's my business that I'm onboarding with, but you're really looking for the address that matches their driver's license. So anticipate that there might be context misalignment between where they're coming from that you can anticipate and what you're looking for to mitigate any potential errors in their process. I also think it's really critical at this stage when you're really starting to gather a lot of information from users. Privacy best principles are your best friend here. Don't ask for too much and have a really crisp purpose as to why you're asking for this information. If you don't need it right now, you probably don't need to ask for it right now. And so there should always be a really clear reason why you're asking for that information. So it's not necessarily in your best interest either to kind of approach it as like, well, while we're here and we're going through this horrible experience, let's just get it over with and tell me everything I need to know about you and that I might need to know in the future. That doesn't feel good for anybody, and it really doesn't align to kind of a crisp, kind of privacy-informed onboarding design. So be really clear about what you're asking. If you don't need to know it, don't ask it. And if it's optional, make that super clear as well. And it doesn't mean that you can't add extra questions that might be really important for your specific product, but just really be clear about that's why you're asking and how you're going to use that data. And again, if it's optional, make that clear as well. And I think here is where we can also really think about how risk factors apply across the board. Standard out-of-the-box risk indicators might not apply equally to all users. So be the experts in how your customers present risk to your company. Tailor the onboarding flow and the risk factors to your specific users, and anticipate where a pretty standard risk flag might not really mean the same thing for your users as it could to standard onboarding flows. For example, if you're designing a product specifically for long-haul truck drivers, a standard risk flag is you seem really far away from your legal address. Are you sure it's you? We kind of know that that's inherent to the model of providing products to truck drivers. So anticipate that and don't present that necessarily as a risk flag. And I think it's really important through all of this, kind of looking more holistically, when we're talking about things like KYC and identity verification, communication is so key. And this is where you can really establish that experience and that trusted relationship with your users. Failing KYC or having your identity fail its verification can feel not just disruptive, it's not just friction, it can also feel a little personal depending on how you choose to communicate this with the customer. And kind of thinking about this thoughtfully from the user experience perspective and understanding that there are many users who have this frustrating experience often. If some users have different pieces of government ID with different versions of their legal name on them, maybe every time they sign up for a new financial product, their KYC fails the first go around and they have to go through this every time. So they're just expecting it to be frustrating and annoying. But you have an opportunity to maybe understand that and anticipate that and try to mitigate the challenges that they're going to encounter. And so it's all about how you communicate and sort of manage through this process. And moving forward through to activation. So now they've passed KYC, maybe they've opened an account, they're moving forward through your product suite. Here's where you really can round out the experience and solidify how you understand your customer base and anticipate their needs. So this is really kind of getting into product specific stuff, but an example that I like to think about is that if you are hoping that your customers request cards, virtual or physical cards, there might be a few more steps after passing KYC that you want to confirm or verify to anticipate potential challenges with the card issuance process. For example, do they want their legal name on their card as their cardholder name? Maybe they do, but maybe don't assume that and maybe offer the opportunity to pick a chosen name. And that might come with some upfront compliance or regulatory work for you to do in advance with maybe your issuing bank or the network. But knowing if it's an option and being able to provide that option proactively might be a nice kind of customized, thoughtful touch for users. And really overall, anticipating the needs of your users and when those needs might arise and doing the hard strategic regulatory work upfront with your partners as well to unblock as many product hurdles as you can in advance and knowing how long things take and knowing kind of where users might go down the path of your products can be really beneficial to turning around a really smooth and efficient onboarding flow all the way through this funnel. And so these are kind of the examples that we like to think about opportunities to turn what could be deemed compliance requirements into these opportunities to actually increase the chance of the user having a great experience. And so just to round this out, before I kind of hand it back for this slide, on the conversion level, one of the things that we've spent a lot of time thinking about in collaboration with our clients is that, of course, with a new payment program and a new banking product program, obviously it's critical and very necessary to establish a good, solid fraud rule strategy and to have some limits in place to control the velocity of new user spend. But what you don't want to do is necessarily decline all of the first transactions of all of your new users that are excited for their new spend card because the limits were too strict and they saw new activity as high risk. And that can be more than just disruptive, that can really lead to drop off for your newly acquired customers. So really being thoughtful and anticipating how and when users are going to spend and making sure that you kind of stress tested your new fraud rule strategy to ensure that it allows for initial success with the new users and anticipating maybe specific possibilities of how they might spend with their new products. So I'll leave it there for this slide. And I think next for us, except actually, Alex, did you have anything else you wanted to add before we dive into like a real use case?
No, I think let's just get right into it.
Cool. So maybe I'm just realizing we have 5 minutes left. So I will maybe go through this very quickly and Alex, feel free to add anything you'd like. So just to really kind of lean into or dig into some of the stages that we talked about on the previous slide, a specific example of a program offering products to international students as they're arriving in the US for the first time. And there might be a lot of financial requirements and things they need to set up before they arrive and as they're establishing their life here in the US. So from an onboarding and KYC perspective, there are many opportunities for this flow to be high friction. But if this is the customer base that you are tailoring your products to, you can be strategic and proactive to try to smooth out some of these very common pain points. So a common example, and this is an opportunity to collaborate with your partners, your program partners, and even your KYC or KYB vendor partners as well, ensuring your KYC method is set up for success for international document verification, which most can do, but it can certainly come with some friction. So asking for an address, for example, standard, good practice, need to do it. But if the user is providing a brand new US address, not only is there very limited address history between the individual and that address, so it's unlikely to help have a successful KYC process, but it also might prompt a US database-based verification process, which is not maybe where you're headed for how you're going to verify the identity of this user. So ensuring that by collecting new US information, which you do need to do, it doesn't actually challenge a successful document verification process, which is what you might be relying on for onboarding and verifying the identity of these new students. And so understanding where in a standard flow, you might be able to anticipate that it's not going to necessarily go smoothly most of the time for your customer base, and kind of collaborating with partners as needed and kind of thinking thoughtfully through the flow about how you can mitigate some of these challenges. I might leave that there, actually. Are there any questions? Oh, did I just go? Okay. How does AI help with any of these stages? The question of the week, month, year. Yeah, absolutely. I mean, I think there's different aspects to that. I think process automation, understanding how to automate and accelerate, really predictable if-then statements of how you ingest and respond to kind of the KYC risks that you're evaluating to onboard your users. That can certainly be accelerated with some tooling in the AI umbrella. But I think what's more interesting to me about applying AI at the more kind of advanced level is digging into patterns and insights that that compliance operations analysts might miss because they're in the weeds and they're in case by case by case, reviewing and onboarding individual users, and might not necessarily have the data in front of them to understand where there are patterns that you can pull out and improve the process and start to really anticipate where things might go wrong, because you're seeing on the whole, after your 10,000 users on board, where the patterns of errors and friction happened. And then using those models to dig into those patterns and getting upstream of them and actually continuing to our theme, anticipate where things might go wrong and really understand your specific customer base and how to make sure KYC is as smooth for them as possible. Alex, what about on your side? How are you seeing AI used on your side, the growth side?
I think I know we're short on time, so the quick thing I'd call out is AI can help optimize for sure. But I think like when we think about that larger funnel, the thing that I try to recommend more than anything else is just stick to the fundamentals. Where it can help, it can optimize, but optimization isn't necessarily like the fundamental step, right? So, look at it as a tool, but don't look at it as a crutch, or don't use it as a crutch, I should say. Yeah.
I love it. And I think that's all the time we have today. So thank you everyone for joining. I hope you learned a little bit. And of course, reach out to Synctera, reach out to Alex. I think we'll follow up with contact information with any further questions. And thanks again. Have a great day.
Thanks, everybody.